Let's hear what Andre has to say with regards to what's happening in the big data and machine learning field. Maybe you can tell us exactly what do we mean by machine learning, and tell us about what strategy you know that you work with, and what is big data all about?
So I'll start with the last one. What is big data all about? We live in a data-driven economy, as we like to call it right now. The world is changing. A lot of people are producing enormous amounts of data that are relevant to capital markets and asset prices. People start to monetize that data and start selling it to market participants. So not so long ago, banks started to figure out how to monetize their data by selling their credit card transactions data, loan book data to hedge funds, investment banks, and the likes. Satellite guys started taking images of parking lots and selling those data streams to interested counterparties, approximating foot traffic to the stores, et cetera, et cetera, et cetera. So we are laying the tracks for what we call a data-driven economy, where a lot of different data sets that didn't speak to each other before and were not available before are becoming available to pretty much anyone. Those data sets are incredibly valuable. People use them to predict stock markets, et cetera, et cetera.
Okay, so that's about the data. And now, with this data proliferating at an ever-increasing pace, there's incredible warehouses of data. So if you just said that pretty much anybody has availability to get this data. So how do you differentiate between one strategy or another, and how does somebody trade better than somebody else if everybody has the same data? Doesn't the data say the same thing to everybody?
Well, bringing that example to what happens in capital markets and how people use it. Quants are about 10% of the overall hedge fund business. Out of those quants, probably 95% are only using price and volume data. They're not using any kinds of what we call novel data. So news, satellite images, location data, weather data for commodity trading, et cetera, is not being used yet. So the point of being different is just, at this particular moment, just starting to use it. As long as you use it, you're already different. Now, let's say two people use exactly the same data sets. What differentiates them? It's the same question you ask a fundamental investor. If you look at two fundamental investors, fundamental discretionary stock pickers, they all have access to the same information. It's 10Qs, 10Ks, company earnings releases, et cetera, et cetera. But sometimes they come up with different views. The same thing happens with quants. Everybody writes its own code. The code produces slightly different results, or very different results, based on the person that writes the code. Now multiply it by enormous amounts of data that is flooding the systems, and you get enormous amount of various results. So we're not really replicating each other. We are years and years away from even competing with each other for now. But replication is not around the corner.
Okay, so data really, I mean, it comes in two different forms. There's structured data and there's unstructured data. Do you trade based on both structured data, which really, I mean, most of the funds out there use structured data. This is rows and columns, easily organized, tick data, financial data, historical data, the stuff that you can download from Bloomberg ad infinitum on markets. But then there's this thing called unstructured data. And that is all, that's the parking lot stuff, et cetera. Do you use both pieces or just one?
We use both.
Okay.
And what we like to call it, we take a view, a 360-degree view on a company from multiple angles. From structured data angle, from unstructured data angle. What we call by structured is price and volume, whatever that is easily readable by a human and a machine. All the unstructured data comes in heterogeneous multidimensional forms that are not easily understandable by humans, and that represents a technological challenge for the machine as well. The reason it is challenging is because the amount of the data is enormous. Just getting it on your systems and storing it is not easy. Most of the data is noise, so you have to do a lot of work to denoise that, to understand what is actually useful, what is not, before you feed it into any system. Then you take that data, then you attach the data to relevant entities, which is also a problem in itself. So there are a lot of technological steps done with that data. But to answer your question, yes, we do both, but we're at the very beginning of that process right now as an industry. This already happened in Silicon Valley, applied to online marketing campaigns. It didn't happen to capital markets yet. If you think about what Google did, for example, they revolutionized not the search, well, they did revolutionize the search, but that's not where the value came from. The value came from after they created a library of all the websites, they realized how those websites talk to each other. Which website is valuable, which website is not, which website attracts more traffic. And they started using that information to sell to online marketers, and that's what made it very profitable. And that's where we are with the capital markets and big data right now. We're trying to index all the different data sources, but we're not yet understanding how they're linked to each other, which one matters the most for the asset prices. And that's where we're going in the next, I would call, 5 years.
Okay, but your fund is doing very well. It's in the double digits. And what do you attribute, what part of your strategy is doing better than other, or what pieces of data are reflecting the most productive signals that you're getting? I'm not sure, that might be asking a little bit too much.
That may be asking a little bit too much. I would say the reason we're doing okay is we're taking a holistic, multi-dimensional view on energy security in any given time, and then we scale that exercise over thousands of publicly traded securities looking for a trading signal to fire the trade.
Okay.
So we're trying to do what a human would do to any given company, but at vast scale and really, really fast.
Okay, so you're looking at so many more data points than the human mind can, not only on one security, but multiple securities, which is what the computers can really help you to do.
Absolutely right. And I would say we would not be as correct as a human would be on any given security or company. Our accuracy rate is lower, but we're looking at thousands of securities. So we don't have to be correct 90% of the time. We're okay if we're correct 55% of the time.
Okay. So do you have what would you call your fund? Besides a big data,
we're a multi-strategy, fully systematic fund built on big data technologies and novel data feeds. That's what we would call ourselves.
Okay, fantastic, and obviously doing very well. It's basically enabling a computer to do many times more things than what a human can do to more strategies.
That is correct. Analyze much more data than the human could potentially do, and scale that across thousands of securities in real time.
Okay.